Hello, good week to all. This is Kelvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices for the week of 6th of June to 10th of June 2022, where I'll be covering the latest trend buyers and key levels to watch for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, pardon me, and the Japan 225, and the German 40 indices. So before we start, let's take a look at the disclaimer slides first. All right. So before we jump into the technical chart of the individual stock indices, let's take a look at the momentum analysis across the globe, where we will we will cover the U.S. major stock indices, Asia, as well as Europe stock indices. So let's take a look at the major US stock indices comprising the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, as well as the small cap Russell 2000. So all you could see over here is that the US major stock indices were actually the worst underperformer last week. What's interesting over here is that the bulk of these losses came on last Friday, right after a strong US NFP job data, which actually increases the odds, or I would say that it allows the Fed to actually maintain their hawkish stance, which in turn created this negative feedback loop into the US stock market, driven by this fear of this tightening liquidity conditions that is likely to persist much longer. So all in all, we could see is that the kind of a worst hit was the SPX 500, down by negative 1.2%. And overall, if you look at the momentum, by taking into the difference of last week performance versus its prior 4-week average, the difference is actually kind of a worsen as well, based on our previous differences. So all in all, right, what we could see over here is that downside momentum has started to gain steam on the major US stock indices, as you can see over here. And what's interesting over here, over in Asia itself, over here is that do not forget also that in Asia, the Hong Kong 50, which is the Hang Seng Index, and the Hang Seng Tech Index, as a gauge of this China big tech stock, they actually closed on Friday due to a public holiday, it means last Friday. So what we could see over here is that we couldn't see actually the true, we call it whole week picture of the Hang Seng Index, the Hang Seng Tech Index. So just bear in mind over here is that this, even though they actually outperformed last week, but however, they do not take into account of one trading day, which is on Friday. Okay, so but what's interesting over here is the Nikkei 225, which is very clearly it started to actually to each inch slowly upwards within the top of its range. Later I'll share it is in fact trading in the close to 3 to 4 weeks range. So right now it's actually coming towards the top of the range. So something like more like a bullish bias within a very within a multi-month range bound configuration. So last week was up 3.7%, and if you compare it to its prior week performance, is quite a fair bit of outperformance versus 0.16. And if you look at it compared to the prior 4-week average, which is at negative 0.5%, this gives a rise of being one of the outperformer or the star indices in terms of momentum analysis. So what we could see over here is that if you take into account of the trend configuration on the K225, it seems to me that upside momentum is building up, but it's within a multi-month range configuration. And the German, pardon me, okay, sorry, go back again. As for the German 40 index, the DAX, it kind of remained unchanged from last week. So momentum wise, it's negative 0.7%. Kind of lackluster right now. It's more neutral rather than we have a clear upside or a downside momentum bias. All right. So now let's take quickly a quick look at the technical chart that I'll share with you all. Okay, so let's start with the SPX 500 first. So overall, I could see the SPX 500 over here is that since the high of 27th of December all the way down to the low of 20th of May this year, this we consider as a major multi-month downtrend, which is still pretty much intact, trading below the 50-day moving average and the 200-day moving average. All right. So what's interesting over here on the highlight over here is that the RSI, the daily RSI managed to actually retreated off this former pullback support now turns into a resistance, acting at around at the 57% level, which is so confluence with this descending key corresponding resistance taken from the high of 9th of June, connect to the high of 29th of March. Also coming close to that, this 57, 58, or 57%, 59%. So what we could see over here is that this recent momentum here that was actually from the low of 20th of March has come to a stalling point where we could start to see a kind of a bearish reaction at this level from here. And what's interesting over here is that in terms of the reaction actually took shape right below the 50-day moving average, which is acting as a resistance at 4217. And in terms of the Fibo retracement, you can see taken from the high of 30th of March all the way down to the low of 23rd of May is at close to 50% retracement. And also, all in all, right, in terms of the Elliott wave perspective, what we could see over here is that the rebound from 20th of May all the way up to the 30th of May, which is close to around 1 to 2 weeks range, is actually considered as a potential corrective wave for rebound. That means someone very similar in terms of scale as this wave two over here, this wave corrective wave two rebound that took shape from 24th of Feb to 31st of March before the bearish impulsive down move resumed of its major downtrend. So all in all, what I could see over here is that this could be the tipping point or the inflection zone where we will potentially see another start of a bearish impulsive down move, considered as a wave 5 to actually complete. So the plus side over here is that we are now coming very close to this tail end of this major downtrend that is in place since 4th of Jan 2020 high for the SPX. So this is wave 1, wave 2, wave 3. Last week completed wave 4. Now we're doing the wave 5 of an A to actually complete this major downtrend, which is potentially the terminal point could be at 3840/3720. So we'll update more this level once the SPX starts to shape more price action in the coming 1 to 3 weeks. So that's the plus point. The plus point over here is that yes, we are now coming to a bearish reaction, but this bearish reaction is actually the tail end of that final wave 5 to complete this first stage of a major bearish move. Okay, which goes there as a wave 8 over here. All right. So, but bear in mind over here is that wave A, once wave A completed, there will be a potential multi-month corrective rebound. That means this rebound will take shape in terms of magnitude and in terms of the duration will be potentially much more than the rebound that we see in wave 4 and as well as bracket 2. But however, not the end of that's not the end of a what I call it major bottoming process yet at 3720. So after that multi-month corrective wave B is completed, we could see another second leg of a major downtrend labeled as C, a big C from here. All right. So to find out more about how the SPX will actually evolve in the third quarter, actually do join me in my upcoming we call it Q3 outlook, which I will actually firm up with the dates in a couple of weeks time. It's likely to be the third week of July. Okay. Now, on the strategy chart on the SPX, so still you can recall that SPX last week we are talking about the residual rebound right below 4217. So more or less it's coming very close. Last week it hit a high of 4162. So I will use 4217 as my key medium-term pivotal resistance to play this impulsive bracket wave 5, so which is the final residual down move of that major downtrend wave A, the first leg of a major downtrend wave A before that multi-month corrective rebound take shape. So 42117, intermediate support will be at 47.5, which was last week's swing low area. So once a breakthrough below 47.5, it could take us down lower towards 39.67, and a retest of the 20th May swing low area at 3840/10 potentially for this week. However, if we start to see a 4-hour close above 4217, then potentially we could see a potential squeeze up to test this range resistance from 26th of April to 5th of May at 43.10. All right, so very similar movement over here on the Nasdaq 100. So over at the Nasdaq 100 as well, we also see the completion of that bracket wave 4. So RSI is almost the same configuration as what we see on the SPX earlier. So don't want to go into a greater detail. So this is the daily RSI indicating to us that there's a higher chance that we now start to see a what I call the end of this potential rebound from the low of 19th of May towards last week high, which is 2nd of June. So what's interesting over here in terms of FIBO, the stalling of the rebound actually stopped right at the FIBO retracement of 38.2%, which is classically your terminal point of your corrective bracket wave 4 corrective wave for and potential end target based on the Elliott wave and the fractal approach analysis approach. So what it means over here is that at this point in time in the coming weeks, we may now start to see another impulsive down leg. That means a series of lower high, lower low to take us down potentially to retest the 20th of May low and potentially much lower towards 10,960. So this could actually conclude the wave 5 of this major downtrend with big wave A that has been taking shape since 17th of November last year. So all in all, then thereafter we could see the start of a retracement to actually retrace this multi-month corrective rebound that is close more than 6 months already. So from there, we could actually see a retracement to actually retrace this down move. But after this retracement of this down move, I do not see this as I do not see 10,960 as a major bottoming process point or major bottoming inflection point where we could take us up to new higher highs to reach plus above 16,900. So in fact, after that multi-month corrective rebound takes shape, that means the end of the we call it wave B, we could now start to see another similar down move 5-wave structure of wave C to take us much down lower towards 10,960 in the rest of this year. So that's still my potential bearish view on the major stock indices. But however, in terms of we call it a short-term or tactical view perspective over here, markets don't go in one linear straight line down. So we are using this technical analysis, integrated technical analysis approach with Elliott wave coupled with other technical elements to help us to actually decipher the key levels to watch as well as the movement as we break down to the various time horizon. All right. So now going on to the Nasdaq 100, the 4-hour strategy chart. So as you could see over here is that last week we expect the residual push up towards 12,960, which is we came very close to it, bring a high on 12,942. So I will use 12,960 slash 13,080 as my okay. Pardon me. Will be my medium term pivotal support for this week. All right. So as long as this level holds and a break below last week low at 12,450 could actually increase the odds of the start of this downside, the residual downside impulsive wave 5 of the major downtrend big wave A to complete this big wave A, going forward to actually test 12,030 for at least the swing low area of 20th of May at 11,600 slash 11,440. And what's interesting obviously is that the 4-hour RSI has started to shape a bearish divergence as well. So increasing the odds, saying that this potential rebound from 20th of May all the way up to 3rd of June is more corrective in nature rather than the start of a multi-week to multi-month impulsive up move. By this bearish divergence, it tells us that this corrective rebound phase over here has really exhausted its potential strength. But nevertheless, if we start to see a 4-hour close above this 12,960, we could start to see at least a minimum squeeze up to actually retest the 26th of April to 4th of May swing high area, the range resistance at 13,500 in the first step. Now moving on to this Seng or this Hong Kong 50, we call it in our platform over here. So it seems to me that this Hong Kong 50, in terms of technical configuration wise, over the last couple of weeks, it starts to actually outperform the major US stock indices. So from 15th of May all the way up to 4th of April and taking to last week accounts price action, it could be trading within a symmetrical triangle range configuration. And last week's push up towards this high of 21,600 level is may be coming to the top inflection point of this symmetrical range configuration. Why? So if you take into account of the Fibo, we call it analysis or the fractal analysis, the rebound actually came now it's coming very close to the 76.4% in terms of the retracement, taking from the high of 4th of April to the low of 10th of May. And if I were to do the Fibo extension, taking from the 15th of March low towards the high of 4th of April, then projecting this the push up from 10th of May to last week, it actually also stopped. This level here is also confluence at 61.8% Fibo extension level, or they call it 0.618 level. So we will actually use this 21,900 as my key medium-term pivotal range resistance for this week, looking for a push down within this impending, we call it ongoing symmetrical range triangle configuration that is in place since 15th of March 2022 low. Looking for a push down first to test this near-term support level at 20,780. Then if we start to see a break below 2780, then you should see a further push down towards the lower boundary of this symmetrical triangle range. Support at 19,900. We saw confluence with the swing low area of 26th of May and 19th of May low. And however, if you start to see a 4-hour close above 21,900, then we could see a extension of this corrective rebound towards the key long-term major resistance zone of 23,000/23,380 on the Hong Kong 50 index. So next up on the major Asia stock indices will be the Japan 225 or the Nikkei 225 or over here. So for the Nikkei 225, what we could see is actually considered as a star performer among the major indices that we have so far this week. As you could see right now, today's price action has already staged a bullish breakout above this 27,760. So what is 27,760 is a confluence of two technical elements: the swing high area of 21st of April, which is pretty important. Why? Because of this bearish shooting star formation that actually causes the recent churn down in price action. And today's price action managed to shape a bullish breakout above this former swing high area. And most importantly, as this descending trendline resistance that is in place since 4th of September 2021 high over here. So all in all, what you could see now, it could actually start to see a potential push up to test this former swing high area of 12th of Jan and 29th of March at acting as a resistance at 28,680. So this move here could be potentially call it a push up within a range kind of a configuration at this point in time. And also taking into account of the daily RSI, the daily RSI also has a bit of residual push up now. It keeps shaping a series of higher high and higher low right now above the 50% neutrality level, indicating to us that there's some kind of a medium-term upside momentum, at least further push up towards this overbought region level. So we should still a bit of room more to go, which actually supports this potential up move to actually test this 28,680. So what will be the we call it the key medium-term pivotal support level to actually maintain this potential bullish bias view within a kind of a rather complex range configuration for the Japan 225. So this will be the level which is at 26,380. So what's 26,380 is in fact this uh, minor ascending or short-term ascending channel support level that I drawn from that is low of 12th of May 2022 over here. So this is we call it the key medium-term pivotal support that I will actually watch to maintain this potential bullish push up towards the range resistance at 28,680. But however, if we start to see a 4-hour close below 27,380, then what we could see over here is today's price move is more likely a failure bullish breakout to take us down back towards the bottom part of this complex range configuration. So in first step will be at 26,500. A break below it could take us much lower towards 25,700/25,410. Okay, now the next one will be the German 40 index, or the DAX we call it. So the DAX over here is that last week it kind of churned within the range as well. It's kind of a sideways range over here. But what's interesting over here is that the price action is still below 15,030, which is this former range support level that is from 6th of October low all the way up to late February this year, where after you see a bearish breakdown of this 15,030, it lead to this dramatic steep drop, and as well as this 1530 confluence with the 200-day moving average. So this making it a very key resistance level to actually watch. So in order for the bulls, right, to actually to see more clearer upside momentum, the bulls got to definitely break above 15,030 level. So then you have this pullback descending trend line, formerly descending trend line resistance, now pullback support at this 13,800 level from here. So what we have for last week we're actually looking for a kind of a residual push up. So it's coming, it actually shaped a push up to a high of 14,640. But what's interesting is that despite this 14,640, so we see a higher high. But if you look at the RSI, the forward RSI, instead of showing similar higher high, it start to shape a higher low, telling us that, hey, after hitting close to the extreme overbought level, bearish divergence signal is being cited, indicating to us that this rebound here, the recent rebound from 10th of May all the way up to 3rd of June, is actually losing upside momentum, where potentially the odds are now skewing towards at least the short term, the short to medium term for this week, to see a potential push down in price action. So all in all, what I could do is that I will use 14,800 over here as my key medium term pivotal resistance level. So as long as this level holds and a break below 14,320, it could take us down lower towards this 13,880 level, which is the swing low area of 25th of May 2022, and as well as this former descending resistance now turns into a pullback support level. But if we start to see a 4-hour close above 14,800, then we will see a kind of a extension of this corrective rebound to actually test that key former key range support turns into a resistance now at 15,030 level for the German 40 index. So all in all, what we could see over here is that the multi-week rebound has already more or less been over since the low of late early May for the major for the indices of the US indices, the S&P 500, the Hong Kong 50, as well as the German 40 indices. So right now we will start to see another leg of bearish reaction for these indices, with the exception of the Nikkei 225 or the Japan 225 for this week, where the Japan 225 is expected to see a potential push up to retest the upper limit of its complex multi-month range configuration. So with that, I see you on again in my next video.